My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from beautiful Lubbock, Texas, we've got the great gringo himself, appropriately named by himself, Austin Hughes. And Austin is a very, very active real estate entrepreneur. My goodness, this guy is flipping houses. This guy has a long-term buy and hold portfolio, multifamily properties, mobile home parks. And he's really focusing in on his town where he lives in Lubbock, Texas. So I'm sure we're going to get some great insights. Welcome to the show, Austin. Great to have you.
Yeah, thanks for having me. I'm excited to be here.
So just give me an idea of what does your day-to-day, week-to-week real estate investing business look like? So maybe, the house flipping side of things, and then the buy and hold portfolio. What do you got in there? And what are you doing on a regular basis real estate wise?
Yeah, so on a consistent basis, we are generating leads, talking to sellers, making offers. That is going, every single day of the year, 365 days minus.
For like the flipping side of things primarily? Is that your main marketing?
That's just to bring the opportunities in. So
whatever that looks like. Yeah.
We'll get a property. We've got a deal analysis calculator that looks at a flip and looks at a rental, and that'll tell us which way to go. So that department is just running full time for acquisitions. And then whenever we take deals down, we've got our project management and construction side of things. So typically we're running about 20 projects at a time, just doing lots of construction there. And we've slowed down just a little bit here lately because we've been focused on getting more stabilized assets, but we've got a lot in the pipeline that we're about to ramp that right back up. So
very cool. All right. So when you're talking about the lead gen that you're doing, is it primarily looking for single family homes kind of along the flip side of things? Am I understanding that properly?
Single family homes, but we also like small multifamily.
Yeah.
And we love mobile home parks. We don't have heavy marketing campaigns for mobile home parks or small multifamily. They just sometimes come in. And we always ask the question, hey, do you have any other properties that you'd be open to selling? That's usually where we find the multifamily and the mobile home parks.
Very cool. Very, very cool. All right. So that's your very, very active side of the business. You say you got about 20 projects on the go at any time, give or take. So of those 20 projects, more or less, like how many of those are going to be just like pure flips, and how many of those on average, you kind of keeping and adding to the portfolio?
Historically, we were about 40% flips, 50% rentals, 10% wholesale.
Really? Wow.
Yeah. For the past 12 months, though, we've been about 5% flip, about 50% wholesale, and about 45% rentals. So we've switched it up a little bit in the last year.
Interesting stuff. Very, very cool. So out of the 20 projects, how many of these would be single family homes versus small multis?
I'd say about 3/4 are going to be single family homes.
Yeah.
And then the rest would be small multifamily.
Very, very cool. All right. Now remind me, because I'm not familiar, what is the size of the market area that you're working in? Like, I've heard of Lubbock, but I've never had the pleasure of visiting yet. So give us an idea of what that looks like.
Well, for those that are like you're kind of familiar with it, Lubbock is where Texas Tech is. So we have no pro sports teams around here. The closest big city is 5 hours away by car. It's Dallas. So lots of Cowboys fans, lots of Chiefs fans with Pat Mahomes. But we're kind of on an island out here. So when I count the people, I count the greater Lubbock area, kind of the whole county.
Yeah.
And there's about 350,000 people, including students of Texas Tech, which is a large chunk of people too.
All right. Well, I'm fascinated, Austin, because you're doing an amazing volume of deals in a relatively small market area. Would that be fair to say? Like I know
That's pretty
guys
fair.
way bigger market areas doing way fewer deals than you are.
Yeah.
So what are you finding that's working most effectively for you guys for doing lead gen?
The most effective lead gen still to this day is referrals.
Hmm.
And when I was starting out in the business, I started to build up a little bit of momentum. It was just me and I had a couple of people helping me. And so people would ask me, "Hey, where are you finding all these deals?" And when I stopped to think about it, because I was just running so fast, I thought, I don't really know. This one was I was talking to so and so, and then this popped up, and it was just a happenstance thing. But
Yeah.
then wait, this one was also a happenstance thing, and kind of what I saw looking back is I was just getting a lot of referrals, and still today, I would say the majority of our rentals that we bought this year have been referrals. The majority of the wholesale deals we've done have come from pay per lead marketing, where they do the marketing, we just buy the lead, text messages, and some of that outbound cheap marketing.
Got it. Got it. Very, very, very cool. Yeah, because I'm imagining that the numbers have to look a lot different for for the flips or the wholesale type deals for there to be a little bit of meat on the bone left over there for you. But if you're looking at the longer term buy and hold, yes, you want to get in at a good price, obviously, but it's really all about the cash flow, right?
Yep,
That's
exactly. So if I'm looking at a rental property, I just need to answer two questions to know if we can buy it. It's, can we finance it? And for me, my standard is, can we finance 100% of the cost, so where we have zero money in the deal? So that's my standard. That's doesn't work for everybody, but it's worked really well for me. So if the answer is yes to that, then with that finance structure, does it cash flow? So if we can finance it and it cash flows, we'll do the deal.
all right.
So
So dumb
keep it pretty
question. How are you
simple.
getting 100% financing on these rental properties?
There's two main ways. So the first way is the traditional way, go to a hard money lender or private lender. You've got to buy it with a good chunk of equity. So you buy it at 75% of the after repair value or less. They'll lend on the entire deal. But there's a lot of these bigger deals that maybe they're at 80% or somewhere around there, to where I would have to bring cash down. Or if I do bring these bigger deals to these lenders, such as the mobile home parks, the small multifamily, they're going to say, yeah, we'll do that on houses, but this is a little bit bigger of a
Yeah.
risk because it's a larger loan amount. So I do a combination of different strategies that's just creative financing. And usually a piece or all of it is going to be some form of seller financing.
Okay. That makes sense, right? So it's not necessarily, well, it is no money down from Austin. Like you're not coming out of pocket except for, I guess, are you coming out of pocket for repairs and that sort of thing to get it up to snuff? No, just getting into it.
Nothing. Yeah, that'll be covered by our lenders as well. So on the long-term holds, if we're coming in, let's say we're closing on a property and we have to pay zero at closing. We pay zero, we receive zero. It's just a net zero deal.
Yeah.
That property has to need zero repairs.
Right.
If that property needs 10,000 in repairs, doesn't fit our criteria. We would have to get a better price, a different structure. So including repairs and everything, our standard is no money in the deal.
Very, very cool. All right. And you're financing most things using hard money lenders or traditional lenders type thing, as long as the price point you're getting into it, or owner financing, I should say, some creative type strategies there. As long as, and the hard money guys are okay with it for single family homes, as long as it's up to 75%
Right,
ARV.
exactly.
Yeah.
Right.
Okay. I'm
So
getting this.
there was a deal we actually just closed today. I just got back from closing it, 30 unit apartment building, and it's a typical example of the structure I use. So bought it for $1,050,000. We got a first position lender to lend us 714,000, and then the seller did a second position seller finance of, I think it was 518,000, somewhere around there. Anyways, net on that deal, it's going to cash flow day one, and we got back well over 100,000 at closing today on that type of deal. And now that one does need some repairs, but it only needs
Okay.
5,000 in repairs. So we subtract out 5 grand from the money we received back. We keep the rest. And now that one, I will say
You're getting paid 95 grand to buy this property.
a lot more than that, but yeah, it was over 100. But we did have to talk to 11 lenders to get the one that wanted to do it on this one. So
Yeah, especially if they figured out the numbers and realized you're walking away from this deal day one with cash in your pocket. I can
which
see
I'm
that
always
causing some raised
upfront about.
eyebrows. Huh?
I tell them immediately. I say, hey, look, we got a smoking deal on this one. It appraised for 1.6, so we've already got a lot of
Yeah,
equity
there's huge equity in there. There's got to be. They won't lend on it for sure.
stabilized. So I said, it's a smoking hot deal. We want money back at closing. I don't want to wait 2 to 5 years to get some equity out of this. So I'm always upfront about it, and you just got to find the lender that's okay with it.
That's okay with it. Yeah, that can accept that, right? No, very, very cool, Austin. That's great. Yeah, because we were talking a little bit off camera, and you're mentioning about the growth that you've had with your business, and I think you said you're around 500 units total in your portfolio, rental units at the moment. Is that it?
Yeah, with
Like,
those apartments, we're at 580 today.
yeah, so 580 units, and everything that you've done has been self-financed or yourself. You haven't had too many outside partners to date. Now saying, geez, Austin Hughes, I wonder if your great uncle, uh,
Howard.
his name was Howard. Yeah, I was kind of wondering about that, but now it's making sense. Now it's making sense. Now, moving ahead, what are your plans or what's on the horizon for you for the next year and a half or so, Austin?
Well, really, the market will determine what's coming up on the horizon. It's been
Yeah,
so hard to predict, even though I do a lot of research into it. It's been really hard to predict. So all I know is that we're going to continue growing and that whatever the market presents us with, we will shift and adjust our business model to match that, just like we did, going from 40% flips down to 5% of our deals we're flipping, right? So we're just adapting with the market. But over the next year, if I could fast forward 1 year from today
yeah.
and say, where do I want to be? There will be significant growth in our portfolio, in our team, and just further streamlining those operations.
Yeah, yeah, that's always the challenge with growth, isn't it? It's getting all those
Yes.
team members in place and the standard operating procedures and dialing in the KPIs and all that corporate type stuff that we don't have to think about it when we're just a one man show.
It is. And when you're like me, and I've kind of broken through these different levels of the size of the business over the last few years, and most people with the growth that I've experienced, it'll take them 10, 20 years. And so it feels more gradual. But when you're going at this pace, all of the systems, which I'm a huge systems guy, very organized, everything is documented, they break
Hmm.
because you've outgrown them. And then you get a new set and you have people that are great. And then you're just growing so fast. And then sometimes they're not a fit anymore. And so
Yeah.
it's just kind of smashing and crashing through these different growth plateaus, and there's so much development and so much new learning throughout that's what I feel like I'm just constantly doing, is innovating and learning. Okay, that was 6 months ago. What's the new way that we need to do it today?
Oh, that is fantastic. And I'm just so impressed that you've got this growth and you're doing so much in a relatively small market because that I mean you must be the number one player or getting pretty close to it
As
in
far
your
as
market,
home buyers, yes, we're the number one home buyers in Lubbock.
I would imagine.
There's some big builders. There's some really impressive new home builders here that have massive companies. But yeah, in the used homes is what I call them. Just buying existing properties. We're the number one buyers here.
So if somebody's listening to this, Austin, they're kind of going, geez, I'd love to kind of dial in even a little iota of what this guy's doing. Say they're in the I buy houses type business and they're doing some of the traditional marketing type stuff that you're doing. What other suggestions would you have for that person as to how they can get out there and really, because it sounds like a ton of these deals are really coming to you through referrals and word of
Mhm.
mouth. So what do you do better or differently to get these referrals than maybe other people do?
Well, in my market, I just show up when when people are fearful, they tend to fade away into the background, and they stop doing the actions that got them where they are. And I've
Yeah.
seen over the last 2 years, I have seen a ton of that. And so just consistently showing up, as I was starting at a small level, I was showing up to just a few people who knew of me. No one really knew me, right? But I was showing up to them, so I was top of mind with them. And that's the key with referrals, being top of mind. There's a million tactics, a million techniques. You can host a monthly networking event like I do. I've had one
Okay.
going for like 5 years, where either myself or someone else will speak and give free education, have a lunch, all that stuff. You can host dinner parties. You can do all these different things to network, but the key is just staying top of mind. As we've grown, staying top of mind looks differently. Now we're actually doing a little bit more marketing, branding, putting out videos so that a larger audience knows about us and keeps us top of mind. But at any level of scale, they say, well, getting referrals doesn't scale because you can only talk to so many people. But there's different ways to stay top of mind, and ultimately that's what will get you the referrals.
So what's your best guess, Austin? Like on the 20 active deals you're kind of working on at any one time, what percentage of those are coming from referrals versus, paying for leads versus your own marketing type stuff? Any ideas about that?
Right now, I would say it's about half and half
Really?
referrals, half paid marketing. During a normal market, if we'll ever see a normal market again,
Mm-hmm.
it's probably about 80% paid marketing, 20% referrals. But like I said, whenever everyone else kind of is fearful and fades away into the background, and you're just consistently showing up, the
Mm-hmm.
referrals are going to go up, because the people that used to send them over here, they're like, well, they're gone. They're gone. Let's send them to Austin.
Got a last man standing kind of thing, right? Is
Yeah.
that,
In,
yeah.
in this market, that's really all it is. And people know that.
Very, very cool. Well, hey, Austin, congratulations. Sounds like you're doing amazing things. You got amazing plans in the future. And what I really picked up on as well is that flexibility. Like you're not worried about what's going to happen to the market because no matter what happens to the market, you can adjust, you can pivot. There's something that you can do. You don't have to
That's
disappear.
right.
You don't have to go into hibernation.
And being in affordable price points really helps make that possible.
Yeah, yeah, most definitely. Austin, this has been great. If people would like to connect with you and find out more or just connect, where should they go?
They can find me on Instagram at the Great Gringo. I post there usually daily, sometimes multiple times a day, but that's the best place to find me.
Where the heck did you come up with the name The Great Gringo?
Long story from high school. Basically, it was a faceless YouTube dance channel. And we'll just leave it at that. But the name got invented then. I've made all of those videos private now, so you can't find them.
damn, damn, I was thinking, oh, okay, I'm gonna go check out Austin's dance
But
video.
the name stuck.
Yeah,
So
it's a good name. It's memorable. Awesome, awesome, awesome. Well, thanks very much for being on the show. This has been a lot of fun.
thank you so much for having me.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.